Good morning, guys. Hope you had a good weekend. So Friday came and went with the BOJ. The Nikkei announcement came out, and the announcement that they were going to massage the yield curve proved to be true, and the BOJ tried to obviously strengthen the yen off the back of that. That failed and failed dramatically. Where we see let's go and have a look at the yen. We can see the yen initially strengthened off the news article. The BOJ were going to do it, and then if we go and look at say like a 5-minute chart. That was the report. Then the BOJ came out, and then the yen weakened across the board, and it was not just against the US dollar, it was against everything. Now the reason for that is that Japanese government bonds, the JGBs, is the second largest bond market in the world, behind the US Treasuries. And as you can see, what they call the carry trade, people will continue to borrow money from the yen and invest in one of these countries and pick up a 5% interest differential. Yeah, so you're basically buying or selling Japanese bonds and buying US bonds, right? And that interest rate differential, free trade. Sure, the currency pair will fluctuate, and at some point, obviously the cost of carry will be more expensive than the 5% interest rate, but that's a long way off, right? We're going to see the yen weaken, and I'd say that line in the sand of 145 will be under threat over the coming. So this head and shoulder pattern. Move that. I don't think that's going to happen. You're going to see the yen continue to weaken from here. So that 145, which is up here, this high up here, the market will go and have a look at that again. And stocks going gangbusters. Right? Highest close since over here sometime March last year. So the market's truly on its way to euphoria stage. However, how long will that last when you're seeing the commodity markets pick up? And remember that the majority of the inflation over the last 2 or 3 years has been an issue of first COVID, then the Russian invasion of Ukraine put serious constraints on the supply side, right? And so that's not only the supply of materials forcing companies to either close or to jack up their prices because obtaining those materials has been more costly. You've now got oil rallying, both Brent and West Texas, heading higher and higher. So that inflation figure is going to continue to boil away, and whilst the US inflation has dipped off, the Fed's not meeting. You'll get 2 more inflation prints before the Fed meets again. So the idea of everything's all honky dory, stocks are going on that story, right? But I don't know how much longer that will happen when they realise that, hey, inflation is still here, and therefore interest rates in the US will continue to be higher and for longer. So that'll be the story. I think we'll probably see new highs back above, might even get over 48 before that eventuality kicks in, or that realisation kicks in. In the short term, I think stocks still continue to rally, but in the long term, I think by the end of this year, the market would have turned as they look to raise interest rates in September again. So that's that story. with the money coming out of Japanese government bonds and into US Treasuries, we're seeing those come off a little bit overnight or on Friday. So as you buy bonds, the yield goes down. It's an inverted relationship. If you're selling bonds, then interest rates go up. So people are buying US bonds, and that's obviously should have a negative impact on interest rates and a negative impact on US dollar. However, we're looking at the Aussie dollar getting smashed, heading back down towards 66, round number, and Euro dollar doing reasonably well. Looking like it might turn here. There's a good level of support and a lot of work done around this 110 level, and I'd lean on that and look for a long trade. The cable, similar story. We're getting these nice cycles here, and obviously dollar yen. The yen is going to be the weaker pair there. So I think that's what we're looking at for this week, is selling on the US dollar, apart from the commodity currencies, and looking at the calendar, PMIs, Kiwi unemployment, UK interest rate decision on Thursday night, and then US non-farm payrolls on Friday night. So at the back end of the week there'll be some interesting volatility, but prior to that I think it'll be selling US dollars and buying euros and pounds will be the trade for the week. Anyway, I'll leave that with you. You guys stay safe, trade accordingly.